Hi guys, welcome to my most favorite day of the week because I get to spend it with you. And I want to talk about something that we talked about last week, and I did a little bit more digging. It's about as clear as mud. But you know, most people think that these fintech apps, this is what they want you to believe, they're about empowerment. I mean, after all, you can do all of your banking right on your phone. You can hold everything right on your phone. That's like amazing. And they are slick tools like there's budgeting apps and payment platforms and digital wallets that give people more control over their money, right? But what if I told you that the entire system was built on your personal data and nudging you in the direction that they want you to go in? And nearly everyone in that pipeline from your data is actually profiting. Of course, not you, but everyone else, well, almost. For years, fintech companies didn't talk directly to banks. They used middlemen called data aggregators, like Plaid, there's an MX, and I think there's another one called something like Finicity or something like that. And what that does is they grab your account information and transaction history and spending patterns. You gave permission. They didn't even realize it, but you gave that permission, and they built profiles, and then they monetized your life. Now, big banks like JP Morgan Chase maintained the infrastructure to allow it, and they kept the data pipeline secure and stable and, of course, scalable. So the bigger they got, the more data was available for these middlemen to aggregate. And surprisingly, they did it for free without really seeing that other, income model really clearly. But aggregators, it was those middlemen, those aggregators that charged fintechs and raised billions on Wall Street. And you, the person whose data powered it all, well, you got a very pretty, colorful app to interface with. Woohoo! Now, the big banks, including JP Morgan, is flipping this script. And they'll start charging for access, not to protect you, mind you, that has nothing to do with it, but to profit even more from you because your deposits in their bank that they get to use as their equity, possibly an unlimited amount of time. I mean, if they do it through the city of London, there are no limitations on how many times they can actually use your equity. But it's not enough. It's never enough. No matter how many profits they make from you, it's never enough. So they get to keep the profits, and if anything goes wrong, you get to pay even more. And what this really means is that your data, your habits, your decisions, your accounts is now a revenue stream. And so when we're looking at this new digital system that we're going into, and, for those that have been watching me for a while, that the question was, will they be using debt to justify money creation? Or will they be using your purchases to create money? And that, my friends, I believe it has been answered, at least in this period where we have to get rid of all of the debt. It will be your purchases to do it. And because these entities really know all of your habits between the banks and that relationship that you have with them and your habits on the internet, which obviously you guys know, they're all being tracked. They know how you think. And so they can nudge you in the direction that they want you to go in. And before you know it, you've spent all of your equity. And here we are, 2030, and you own nothing and you didn't even realize it. So what I think you need to be looking at, if you haven't already, is opt in to sound money, not surveillance. Gold and silver don't require aggregators. You don't need to do that GLD ETF. They don't track you. This gold and silver doesn't sell your data or prevent your access. They're yours. You hold them and you own them. If you don't hold it, including your data, you don't own it. So it makes some sense to build financial tools inside of your community. This is local community. Share that knowledge, offer that support, grow a local exchange system, because let me tell you, when hyperinflation kicks into gear, things get very local for a while. So it's important to create those local relationships now. But in the future, look, we've got to go through a hyperinflationary depression. I'm sorry. It's just a fact. If you are properly armed with a sound money strategy and a sound money foundation, then you actually have the opportunity to grow your wealth and come out the other side of it better. And you be the purchaser. Right? Because you're going to hold your purchasing power intact. Because we know that when one system dies, this is just a result of edging us into a new future monetary system, I should say. And look, it's going to happen one way or the other. But before we can get to a solid circumstance that is backed by sound money, because that's the big fight. We have got to get this in the global monetary system. But you need protection all along the way. So I'm going to encourage you to ask the harder question. If everyone else is profiting from your financial footprint, why aren't you? How about putting a footprint in that will actually matter, not just to you, but to all the generations to come? We have to do this. So local communities, so that you can create a surety in food, water, energy, security, barterability, wealth preservation, community, grow that local community, and shelter, so that you can sustain a reasonable standard of living. But in that wealth preservation piece, what we know is that when one system dies, another one pops up to take its place. Gold is, and silver as well, gold and silver is the bridge to hold your purchasing power intact from one currency into the next. And if you have gold, there are opportunities that will present all along the way. Why is it okay for Wall Street to profit from your data? And frankly, the more data that they have on you, the easier it is for them to know how you think and what you want, and then to build those tools to nudge you in the direction that they want without you even realizing it. So I couldn't find the exact amount that JP Morgan is charging. So we'll kind of keep that open. But this takes it to a new level. Just like the Stablecoin, the Genius Act, takes the move to the new system. I mean, I really hope we can have this conversation, because I really want it like a two-way conversation. But you have to understand that I believe, and I believe this firmly, I'm going to say 100%, and I'm not giving myself any wiggle room at all. But what the stablecoins will do is they'll justify and usher in the visible hyperinflation, which just even according to the velocity of money, that's already begun. You just can't see it yet, but this will usher it in, because the more you spend, the more inflation there will be, because the more money there is. And the easier it is to create money, the more money gets created, and then what happens to all that money that's out there? It has less and less and even less value. So now I'll start to take questions, but I'd like some comments as well, please. And I'll start with Jeff Hadley. What type of self-employment businesses would be good during times of recession, hyperinflation, deflation, economic depression, dollar crisis, low purchasing power? Well, you want something that AI can't really fix, right? So things like electricians, plumbers, builders, right? So carpenters, basic skills that are necessary no matter what. I mean, when we were building, and as we're building, because we're definitely not done yet, but as we were building like the bug out location, part of the things that we thought about when we're inviting different people to participate and be part of that community are those skill sets that we all need to have. And, with reports, I mean, there's a lot of high hopes for AI and those jobs that AI can do faster and certainly cheaper, and 24 hours a day, and they don't even have to pay overtime. So that's what you really want to think about if you want to recession-proof your life. What can they not duplicate with artificial intelligence? And then that's build some of those skill sets. And Jas S asks, what do you see the future of insurance companies? Blah. Is their business model sustainable? I'm sorry, Jas. I see an awful future for insurance companies because and it snowballs, right? We like to think that they're really, really safe, but quite honestly, when the Federal Reserve dropped interest rates to zero in ZIRP, zero interest rate policy, ZIRP, and they did that after the great financial crisis in 2008, those insurance companies had to go out on the risk spectrum to generate enough income to actually pay out on, say, your fixed rate. Let's just take annuities as an example, or life insurance policies would be another one. Anything where they've made future promises. So what actually happened was a lot of private equity, and I've been wanting to do a piece on private equity for a long time now. Not my favorite thing, but private equity, because they could get money for zero, for nothing, they went in and they bought up a lot of those insurance companies, particularly life and those kinds of insurance companies. And then what they've done is they've built their own Wall Street products, their own derivatives, and then that's the garbage that they put into those policies. And that's why when you ask me that question, what do I see of the future of insurance companies? I see so much illiquid garbage inside of those insurance companies that I would not be banking on me being able to get my money out, because people will think, oh, well, they're insured. They're saying, they're guaranteeing this. No. Read your contract. It'll have all over the place that this is dependent upon the claims paying ability of the company. So ain't no guarantees. Physical gold, physical silver in your possession, you hold it and you own it outright, and it holds your purchasing power, and it has done that for many thousands of years. That's the best guarantee that you can get. That's why gold, particularly as the primary currency metal, is the safe haven asset. And it is the only financial asset, according to the Bank for International Settlements, biggest bank in the world. It is the only financial asset that runs zero counterparty risk. All those insurance contracts, they run the risk of the insurance companies not having the ability to pay out your claim. And let's face it, their job is not to pay out the claim. Their job is to keep as much money as they can. So you're taking the risk without realizing it. They're pulling the gains out because private equity is not about your benefit. It's about their benefit. Yeah, I don't have a good feeling about it for those reasons. And I actually did, it's been a while, and maybe I need to revisit it again, but I did something on insurance companies and the private equity. So that's my feeling on it. And Wolf asks, Lynette, I don't know if you've seen the video called Fall of Empires, Rome versus USA, but it's alarming how close the U.S. is following the downfall of Rome. I haven't seen that. Would you, Josh, would you make sure that I get that? But yeah, because these are repeatable patterns. So that statement doesn't surprise me at all because I have studied all of this stuff forever. And they all look the same, whether it's Rome or France or Venezuela or Zimbabwe, they all look the same. We start out with sound money and people get comfortable. That's what they're used to, right? But then they start to abuse the currency and pull the sound money out. So in this country, 33 gold gone, 65 silver gone. Now, just debt. That's it, just debt. And they abuse it until, frankly, there's nothing left. So thank you for bringing that up. I will view it. I think everybody should view it. But you can view anything on any of these 4,800 currencies that do not exist anymore. And yeah, you're going to see parallels all over the place. And that's what our strategy is built on, actually, is those things that happen 100% of the time. Because even though I cannot guarantee the future, I don't know. You tell me if something's happened the same way over 4,800 times and it's happened 100% of the time, is this time really going to be any different? Probably not. Thank you. That's yeah, something everybody needs to understand. And I'm not ready to announce this yet. So I'm only going to give you a little bit of a teaser because I know that people have had a hard time showing people that they love and care about what's happening. And then the people just go, la, 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 la. Well, I think we might have a tool that you can use. And give me a minute because we've got to announce it, but it's in the works right now. It's not something that is going to happen. It's something that's in the works. I just want it completed before I announce it, but I'm really excited about it because I think that it's going to make a huge difference. So we'll come back to that, maybe a week or two before I'll be able to announce it. But I want to announce it when we can fulfill it. I don't want to do it before we can fulfill it. We're not ready yet to fulfill it, but we're working on it. And Neo the Wise asks, can they kick the can down the road by another 15 to 20 years with stablecoin? No way. The more I think about this and the more I look into this, the more absolutely convinced I am that the stable coins, because think about it, okay? Who creates the stable coins? Corporations. And the old system, also corporations, because banks are private corporations, they're not government agencies. So you would go in and you would borrow money from the bank, and then that would generate money on, in a fractional reserve system. They kind of like to think that it's just 10 times to 1, but it's really so much more than that. But now you don't have to go into the bank to borrow. All you have to do is decide you want to buy something. And then the corporations like Amazon can create stable coins. All they have to do is buy dollars. So in some ways, that's a great question, really, Neo, because you're saying, the stable coins build another artificial market for dollars and dollar-denominated debts like treasuries. And so it is kicking the can in some ways. But if this money is now created just because you decide that you want to buy something, and they're going to give you stuff for free in order to get you to start buying, but you've got all of these major companies, Walmart, Amazon, as well as JP Morgan, as well as the banks, just creating these stable coins. It can kick the can down for a minute, but that's an awful lot of money creation, And that's why I think that this stable coin is a tool. Number one, it's a tool to get everything integrated because you're going to be forced to use it. And my bet is, because I've talked to a lot of people and they're like, stable coins, huh? They're not aware at all about the stable coins or the bill or what's happening to the plumbing in the financial system. You're ahead of them in that for sure. But my guess is within the next 3 weeks, so let's put that down on the calendar and see. 3 weeks from today, let's see how visible all of this stable coin is going to be to the normal public, how it's being introduced, because they've been working on it. I mean, they couldn't fulfill the requirements of Dodd-Frank in 15 years. But boy, they are ready with those stable coins just like that. Okay. I could be wrong because this is not something I have any control over, but my bet would be 100% the stable coins will be used and they will usher in the visible hyperinflation to crash the system. I don't see any other way around it. And that has to happen. So no, not another 15 or 20 years. Maybe another 2, maybe, but it doesn't really kick the can down the road because that inflation will be visible much sooner. But they'll blame it on war, or they'll blame it on this, or they'll blame it on that. And I'm telling you right now, I could be wrong, but I am 100% convinced it's stable coins. I really am. And when I feel something quite this deeply, I'm never really wrong. I wish I was, and I could be this time. We'll find out. I'm either going to be right or going to be wrong, but I'm pretty sure I'm not wrong. And Casey Wood asks, Lynn, help people. Oh, that's what my mom used to call me. Help people to understand we don't want tokenization of gold and silver. Boy, do we not want tokenization of gold and silver. But remember, and I was doing some writing and I was in the 80s, right? I was a stockbroker and it was the beginning of globalization, and now we're in deglobalization, except for the financial system. The financial system is getting more globalized. It's the supply chains that are becoming deglobalized. See that? So I was there with a front row seat, for that. But the focus in that time was gathering assets in-house, right? So if you could encourage your client to hold their stock certificates, to hold their bond certificates in the account, I got paid for that. Because then the banks could use that as collateral, right? Then things were changed. But up to that point, most people held their own certificates. They held their own bond certificates. They held their own stock certificates outside of Wall Street. So that means that Wall Street couldn't use it as collateral. So I was there for that push to gather collateral in. And of course, then they changed all the rules. Deposits are really a lending tool, blah, blah, blah. And you're just the beneficial owner on the bottom. So when I'm looking at this tokenization, what I'm seeing is they have maxed out, they being Wall Street and the banking sector, has maxed out the level of collateral that they're holding. So this tokenization is about expanding that collateral base. And you tell me What is more firm collateral than physical gold and silver, the two monetary metals? So I agree with you, Casey, 100%. I am not going to volunteer, and they're not going to try and force you, because if they force you, you're going to know that they've got something planned. Whereas if they get you to volunteer like a major crisis, and now you're going to lose your house. And so what do? Think back to 2008 when they restructure your mortgage. They're going to tokenize your equity. They're going to force you, well, if you tokenize your gold and your silver, wow, well, then we'll give you a break with this. So they're going to nudge you to do what they want. And I'm going to tell you, don't do it. This is the importance of community, because if you do that and you hold all of that equity on your phone and you go shopping, because they employ the brightest psychologists and psychiatrists in the world. And with AI, they know how you think. You'll spend all of your equity by 20 to 30 and you will own nothing. But I am 100% certain you will not be so happy that you did that. So yeah, Casey, I'm right there with you. I have absolutely zero intention of tokenizing my physical metals. And so how do you avoid that? Don't be vulnerable inside of a crisis. That's how you do that. You want surety in food, water, energy, security, barterability, wealth preservation. Community can help you with that, and shelter. And then when they say, well, we have to do this, no, I don't have to do it. So local community is absolutely critical to help you avoid being forced into a position that you really don't want to be in. And global community means that if we can get 3% of the global population to convert their garbage government debt-based fiat money into sound money, we got a shot. After everything gets burned off, one thing that I've noticed, people think that it's an easy transition from here to there. It's never easy. They have to get rid of all of this mountain of debt. They're just saying 37 trillion, but you're not looking everywhere where that debt is, and that's just in the US. We're looking at the IFF figures of $313 trillion in money that's out there, in debt money that's out there. And we are not even talking about all of the derivatives, the big bets that are on top of that, which are in the quadrillions. So big, you cannot wrap your brain around it. But it's like a black hole. When this thing goes south, it will suck any debt, any leverage. It'll suck it in. And that, my friends, is frankly where we get the opportunities that lie ahead. Because if you can hold your purchasing power, when those opportunities arrive and we see the smartest guys, we see that accumulation cup formation, then we start to convert our hard assets, our gold, into those then undervalued assets that can generate income for you that you cannot outlive. And you have a legacy to leave your family, or I know people that have really fallen in love with different charities and they want to leave their wealth there. However you want to do it, but it'll be up to you. So yeah, that's, you just, whew. And ML asks, will the digital system make traditional banking obsolete? Not until us old people die. We just aren't dying quite fast enough. But I don't think so. I think there's going to, at this point, I mean, ultimately, perhaps, and it's a really interesting question, because the banks were used as the tool to spread central bank policy to the masses. So central banks going into a CBDC they actually could do it directly. And this has been a big part of the debate, and how they can protect the banking system, meaning how central banks can protect that. So I think some of it may remain because they really don't want you to understand how much things have changed. But if we don't get sound money in the system and it's all just surveillance money, and I mean, we certainly know there are not nearly as many branches out there as there used to be because more and more people are adopting, I was just reading an article on it, but adopting mobile banking. That takes us into the fintechs, financial technology companies, so those banks. And we know what happened with Synapse. They went bankrupt and still maintained a lot. I mean, 95 million are missing, and there are people that will never be made whole from it. So even if we are forced into that circumstance, you better have gold and silver outside of the system, and then you convert it as you need it so that they can't just swallow up all of your wealth. So it's going to be very important. We'll see what happens. Will the digital system make traditional banking obsolete? In many areas, yes, but probably not in all areas. And we'll see. We'll see it together. And are you sure? That's a good question. How long for it to burn off? And I think you're referring to the hyperinflation. Okay, so technically speaking, the burn off would take half as long as this last phase, right? So I can tell you that I have personally prepared my barterable part of the portfolio for myself and my daughters for 10 years. If I don't need to use all of those, and this is global, this is not going to be something that can happen very quickly. So plan for 10 years. If you plan for longer than that, because that's just the barterable part of the portfolio. And in the strategy, and I've been working on so many things regarding the exit part of the strategy. But in the strategy, we have an emergency, shorter term emergency part. We have an intermediate part, and then we have the long-term part, and then we have the exit part. So the strategy is built in layers, and it's really designed to help you and be there to support you in every single area as we go through this phase. So how long for the burn off? I don't really know. I can't really definitively answer that. I can tell you that I'm prepared for 10 years. And of course, I also have my food, water, all of the mantra pieces in place. I have my bug out location. I don't know what your circumstances are, but I'll tell you, get that local community set up as quickly as possible, learn some skills, bring some value, because put it in a backyard garden. If you don't have a backyard, put in an aquaponic or aquaponic. I prefer agua because you can use a fish tank and I don't have to buy chemicals, to keep put nutrition in the water. But you need to be prepared to feed yourselves and give yourself water, at least for a certain period of time. That's going to be important no matter where you live. If you live in an apartment in the middle of the city, there are community gardens. Go and give them some time. There are farmers markets wherever you live. There's farmers markets. Get to know the people that create your food. Give them some of your time. Create those relationships. You will be much, much better off if you do that. And Deb Warner asks, I'd heard this morning that the consumer confidence levels are now above 97%. Isn't that a part of the pre-hyperinflationary event to include the stock market skyrocketing along with profits in T-bills? Okay, So there are a few things in here, but you are on the right track for sure, Deb. But yep, consumer confidence is up because it's still near the lowest levels, but it is up because there is hopes that the economy will magically grow. Well, a lot more free money printing with all of these things, these bills being passed is going to be created, and that creates inflation, which is a substitute for GDP growth. But on the other side of that, or the flip side of that, the IMF also came out this morning tamping down the future growth. But that consumer confidence is critically important to pay attention to, because once it breaks below those lower levels, I do believe it's game over. Then we're going to see hyperinflation in spades. So more rapid inflation will do that. But yeah, people are hopeful. They always are. They knew when they set up that system. And they actually said people marry the legal money of the state. And they cannot but help but think that at some point this must regain some of its purchasing power. It never does. It never, ever, 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 ever does. Even when it looks like it on the charts. Because in 2008 and also in between 29 and 33, on the purchasing power graph, you see an upward trend for a minute. But that's because there's less money out there. It gets burned up. Things did not get less expensive for people. So, yeah. And the stock market skyrocketing and the crypto market skyrocketing is all about keeping people engaged in the intangible markets. But we're smarter than that, aren't we? And if you're going to do that, that's okay. Just be properly diversified. What if I'm right? What if I'm wrong? Do something that does not matter if you're right or wrong. Then do whatever you want from that because you're protected. Yeah. Now, T-bills, that's shorter term. It's not a profit from a T-bill, right? Because these are interest rates and this is market value, right? So what they're saying is they want the interest rates to push down, which then puts the market value of the bond up. Now, a bill is short term, a note is intermediate term, and a bond is long term. So if this is when the bond or the bill is issued, right? Take a look when interest rates move, what gets the greatest movement? The longer you go out, the greater the movement. So with T-bills, you don't get a whole lot of fluctuation because they could be maybe 30 days or something like that, right? So it's not a profit from a T-bill, but they do want to push interest rates down, which then would encourage more of this, right? And then you can shop more. And here we go. We've got the hyperinflation. Happy days are here again. No, not really. They just want you to think that. And Jeff Hadley asks, when the dollar loses most of its purchasing power, which it already has, and goes to a value of 0, will it really even matter what job a person has, since monopoly money earned wages won't buy anything? Correct. But barter will. So if you have those skill sets, those are desired skill sets. And so if you were coming here to my urban farm and I needed some plumbing done, you're right. You're not going to want to be paid in this stuff because it becomes obvious, but you would want to be paid in this stuff or food, water, all of those other, things that I have that you need. So even though you're not going to want to work for fiat money because it won't buy anything and people recognize it at that point, those skills still have a lot of value. That's the importance of local community. Bring in what you have, whether it's a set of skills or gold and silver or a garden or a pool where you can gather water or whatever it might be. You're coming together with other like-minded people because even though they might not believe you right now, let me tell you, when you're in hyperinflation, then everybody knows the truth. And they're scrambling, and we're going to have to help them. You know, I've had far too many people say, well, if they don't get it, that's too bad for them. No, no, no. We have an obligation of humans on this planet to share the gifts that we've been given. And one of the gifts that everybody here, everybody that's watching this has been given is knowledge, that you are seeking the truth. And that's a huge gift, and you have to share it. But you have to share it in a way that people can also understand it. And that's what I've been working on forever, right? I got it in here. How can I explain this in a way, not that just you can understand it, but that you can take it to heart and therefore take action and protect yourself. So yeah, the value, it's 3 cents now out of the original dollar's worth of purchasing power. And it's fast going to zero, especially with all of the spending that's happening and all of the new debt. But yeah, you're still it's going to matter. It's definitely going to matter because people need the skills that you bring, even if it's an extra body for protection. Maybe you're a sharpshooter. I don't know. Learn some skills, bring value to the table. That's what I can tell you. And I do try and do that with every one of these, with every interaction. I really work hard to bring value to the table because I think that's what we're all supposed to be doing. Oh, I'm just trying to do my part. And Neo the Wise asks, is it possible that some fiat currencies fall, but others in emerging economies sustain the brunt because those countries are becoming economic centers of the world? So let me reread that again to make sure I understand what you're asking me. Is it possible that some fiat currencies, so it looks like developing currencies, fall, but others in emerging economies sustain the brunt, so don't fall as much because those countries are becoming economic centers of the world? Actually, it's not, because all of this fiat money is interdependent, and the US dollar still holds the title of world reserve currency. And how are those other fiat monies being created? Same way that the dollar is. It's debt, right? Zimbabwe ran the experiment, and it's a failed experiment, and I bring it up all the time of saying our currency is backed by gold, so therefore there's going to be limitations on how much we can create. But it wasn't backed by gold because you couldn't convert it. The gold was not redeemable. You, the public, couldn't pull it out. And so they could easily do that overnight revaluation, which of course then revealed the lie that the currency is really not backed by gold. Because if it was, they could not do that if it was really backed. It's just pegged. So no, there is no possibility. Economically, we are really integrated. Further, in emerging economies, that's where stablecoin adoption backed by dollars has been mostly. Primarily in Africa, quite honestly. So what that does is it translates what happens to the dollar to all of those emerging and other economies that are using the stable coins. Yeah, nobody's immune from this. Nobody. The speed at which they lose value is different. Dollars lose value slower than, say, Nigerian liras. I think it's liras. But the Nigerian currency or whatever, but it's all to degrees. Once this one fully implodes, then there's no place to go. This is where you want to be. It's universal money you can take anywhere in the world and instantly convert into that local currency. Critically important, critically. And Patriot Girl 1, trades are the way to go. If I had a kid, I'd steer them in that direction. Well, you know, Patriot Girl, that's what people think, that it's so much easier just to trade, right? I mean, you're sitting at home, you're not breaking a sweat, you know, you're just buying and selling, buying and selling, buying and selling. garbage, garbage, garbage. And that has only value as long as this stuff has value. And we have been trained to think shorter and shorter and shorter term. But do you really think that that's the way that central bankers or long-term people that are really controlling all of the movement in the economy, is that really how they're thinking? Super short term? No. What you're thinking is and you've been trained to do this, so I get it 100%, but I'm old enough to remember and to see the value in looking at a longer picture. If you look at short term and it's just trading, tell me what value you're bringing into this world. Absolutely nothing. And if everybody is just sitting there trading, there's going to be an awful lot of services and things that you need that won't be available. So I'm guessing that you're pretty young and not ancient like I am. But there's value, like I can learn things from you, you can learn things from me. That's why I'm doing it. And I'm not a trader. That's not my thing. That brings no value in this world. And I believe strongly that that's why we're here, is to bring value. What value will you leave when you're gone? I feel quite confident no matter what happens in the future, whether I'm successful or not at getting people into getting gold back into the global monetary system. I mean, that's a pretty lofty goal. And it sounds crazy to me. I'm not going to lie. It sounds crazy because I'm just like you are. But I know if I don't at least give it my best shot, for sure, it won't happen. But there has to be a whole bunch of me's giving it the best shot, right? One person can't do anything. So why don't you join a community and have a whole lot more value, because the system has been financialized. Everything's been turned into a trading product, but that never lasts. Not ever, ever, ever. And these are one of the patterns that happen every single time in a currency's life cycle. You just have to be wiser. Well, you don't have to be, but I prefer to be wiser so that I make educated choices that are based on putting my best interests first over the long term. And David R. Madonna says, "Hi, Lynette, love you and your money gun." Thank you so much. Bought 3 ounces of gold before knowing about collectibles. All my silver is bullion too. That's good. On a fixed income, should I exchange both for only collectibles? No, you should not. First of all, I don't really love collectible silver, because it's a different kind of a beast. It's okay, but for the barterable part of my portfolio, which is what silver is for me, you don't see me holding up a slab, right? Now, for gifts, yes, I totally give those slabbed silver to my grandson because he loses his mind over the joy of it, right? But he also has just raw silver too. So hold on to your raw barterable silver. I am hoping that you have some of it in fractional form. Fractional form is less than an ounce. So here's a constitutional dime, pre-1965. There's a 1 ounce silver piece. Don't convert that in. Leave that like it is and call us to make sure that you have the right mix and the right quantity and all of that. But I'm showing you right now, and plus when I wear my travel bracelet, the bullion that I personally hold. 3 ounces is not so dangerous because they probably will say something like you can't have more than. But I only hold this because this is what most people hold. And so if I need to use an example, I want to hold up something that's accurate. And the rest is up to you. But I'd say give us a call. Have a conversation with one of our strategy specialists. see what you're trying to accomplish, what you have to work with, where you're at, where you want to go, because our goal is to meet you where you are and educate you and help you get to where you want to go. So I can't just do a blanket answer, but I'm glad you like the money guns. I like them too. Keep your silver. Unless you have so much of it that could make different sense. But have that conversation. I can't give you a blanket answer on that, but have that conversation. And Deja Vu asks, can the system destroy sound money assets? No, it cannot. That is the beauty part of it. And that is because it is used, both gold and silver are used in every single sector of the global economy. So they have the broadest base of function and the broadest base of demand. That has been tried for 5,000 years. No, the system cannot destroy sound money assets. That is a key component. Gold is a key component in the dynastic wealth stool. Dynastic wealth is wealth that lasts in families at least 300 years. And it is gold, truly rare collectibles, and real estate. The gold component of that enables you to purchase the other two components. And you can do all three components with gold, because you can own a gold mine. You can own rare collectibles that are gold. You can, this is a rare collectible. We could get a lot more rare than this. And here's your raw gold. So, no, the system cannot destroy sound money because of its demand and supply foundation. That's what it is. And John R2724 says, what do you think about income funds, price stability, and potential to keep paying dividends throughout what's coming? I don't think very highly of it. And even if they manage to, you're getting, all they're going to do is pay you this that has no value and you can't buy anything with it. So I think it's pretty much irrelevant. The income doesn't mean anything. And no, I don't think that income funds, because what are those income funds based upon? They're based upon debt. So interest-bearing debt, bonds, notes, and dividend-paying stocks. So both of those, all of that is denominated in dollars or euros or yen or wherever you are in the world, and those won't buy you anything. Even if they can, and here's the other part of this, even if they can actually pay you, it will be irrelevant because they're paying you in dollars. I'm sorry, it's just like Social Security. They'll threaten Social Security, and they're going to have to do something to cut benefits for sure, but it's still going to be irrelevant. You have to become your own central banker and make sure that you have barterability and wealth preservation. And we can help you with that. And Helena Stromska asks, hi, do you think the gold will be only for government and central banks and silver be for the people? No, I'm using gold myself. And what is that saying? I know you pulled it up before. Gold is the money of kings. Silver is the money of peasants. Barter is the money. No. Gold is the money of kings. See that instantaneously? Thank you. Okay. No, I don't. But central banks are certainly accumulating more gold than they ever have since tracking began. What do you think they might know that you don't? They know what they're doing to the money system. And Sir Alfred, where is the easy on the eyes emerald? Oh, what day is her video coming out?
Thursday.
Thursday. Emerald is not here doing this at the moment, but she's got a great video that's coming out on Thursday. And let me ask you, would you like to see more of that easy on the... the camera loves that girl. When she was doing it in the beginning, when we first started Zang Enterprises and she was coming on, she gathered the name of the ginger goddess. So I don't know if anybody has called her that, but she is. And so, yeah, easy on the eyes, Emerald. We need to make sure that she knows that. You'll see her on Thursday, but let us know. I mean, maybe we can run a little survey to see how often you would like to see Emerald. That would be fine. I love her. And Sheridan Forbes asks, I collect scrap copper and scrap metal, sell them at the scrap yard, and buy silver. That's awesome. That's what I used to do, so very similar to that. Keep stacking, folks. Prepare for the worst and pray for the best. And yeah, that's what I used to do. I'd go down to my father's job sites because he was a developer. I'd pick up all that scrap copper wire. At night, I'd sit and I'd whittle off that plastic that they put on it. My uncle Ali was a junk dealer, so like taking it to the scrapyard, and I'd sell him that copper by weight. And then I would go to my uncle Al and I would buy, I should bring that out. I'll bring out the very first piece I ever bought from Uncle Al, and I was 13 at that time. First piece. And it wasn't a piece of gold, by the way. If you want to see it, I mean, it's kind of nice that, and now I'm 70, almost 71, and I still love that piece. And my parents had it for a long time, so it's got an awful lot of sentimental value to me, too. But yep, you're right, Sheridan. I did that myself, and that's a great way to go. Keep stacking. And V. Flores says, can anyone tell me if buffaloes and liberties, gold and silver, are considered collectibles? Lynette said she only gets collectibles. No, they're not. Here's a really easy way to know. If you can hold it in an IRA, I don't feel this way about silver, but with gold, 100%. If you can hold that gold in an IRA, I'm not buying it. It's not classified as a collectible. So this is a collectible. Arguably, this is a collectible. It is not this. This is bullion, right? It's not a buffalo. A buffalo is more pure than this is, but I can hold this in an IRA. This is all standardized too. I can't hold this in an IRA. So which one do I want to hold personally? This one. And it happens to be minted 1903, but it can be anything prior to 1933. So that's a really easy way to go. Can I hold it in my IRA? Not doing it. At least that's the way I look at it. And Miramar asks, is it unutterably unacceptable that our money will be completely controlled by individual corporations? Oh, no, this wasn't a question. This was a statement. Well, it already is. Unutterably unacceptable. I agree. No, that's the piece in here. You got this on the second part of this comment. No regulation, no redress for us, no agreement of rights, way worse than Citizens United. Yep, 100%. It is unacceptable to me. That's why I'm battling to get sound money in the system, because otherwise, you're right, no accountability, no regulation, and that's what they do. They let new things that move their agenda along just develop and grow and experiment, and you're the guinea pigs. So yeah, I'm right with you on there. It is absolutely unacceptable, 100%. So that's the battle. And the more people that we can get to join this battle, the better shot we have at winning this war. We have to do it. We have to do it. And Elder Joshua Hedrick asks, you're actually telling people not to buy gold and silver if it's IRA eligible. That's the dumbest thing I've ever heard. Well, Elder, maybe, except that I want the kind of gold that I can hold if they should do an overt confiscation. And most people, if they even own gold, own it inside of an IRA, because that is the kind of gold that is classified as monetary gold. Now look, some gold is better than no gold, and you might notice that I wear a lot of jewelry, and most of that is gold or platinum or silver, right? Because gold and silver in any form is monetary at its base. But if you cannot use it in the normal marketplace, then what good is it? If they take it away from you, like you've got it in your IRA, and they decide to do an overt confiscation, and they go in and they do a big sweep of the IRAs, and what do? They leave you a whole bunch of this crap that means nothing. That makes no logical sense to me. So, if you think I'm the dumbest person, that's okay. You can have your opinion, and I'm not. And I want you to keep coming back, and I want you to keep verbalizing what you think and how you feel, because quite honestly, I think we need a variety of opinions. Now, I try and make mine very well educated because I've been in these markets on some level for 60 years, almost 61 years. So I kind of think I have a well-educated opinion, but everybody's opinion matters. And frankly, I try and learn from everybody. Maybe I'm missing something. Okay, bring it. Let me hear it. And this is one thing, it's actually something that I like about myself, even though sometimes not. But even if initially I go, no, that can't possibly be, I then will think about it. And I've been known to change my mind, to change my opinion. But give me a strong argument. Give me a fact-based reason why you think that. And then you got a shot, right? You got a shot, because I want to be open, because my job is to give you the best information that I can. What I want is I want you to make educated choices that puts your best interest first, period. Because the reality is you're the one that's going to either benefit or suffer the consequences of any of the choices that you make. Just like I'm the one that's going to reap the rewards or suffer the consequences of my choices. So I'm not saying there's only one way to think. I am saying bring everything in, and I appreciate that you verbalize that. And I don't want anybody going, oh, because he said that I'm dumb. I don't want you to do that. I'd rather you embrace this person for the fact that they're brave enough to bring a different kind of idea or thought into a forum like this, right? We can only learn from each other if we can hear from each other. And we don't have to agree to support each other or be supportive of each other. So really, thank you for that. And maybe if you keep coming back, maybe you'll change your mind, and maybe you won't, right? That's the way it goes. And Ethereal 369 says, how do you find local community? People that are really like-minded in this and prepping. Local community gardens are a great way to start. So, they may not have a plot available, but go in and volunteer your time. You'll get to know people. You'll get to find out what they're thinking and building a community that way. Go to farmers markets. Get to know the people that are creating your food. Give them some of your time. create that relationship. And then what happens, that's the place, even being here, and talking to people. You've got a community here, but locally, that's what you do. The universities frequently will have different gardening, farming kind of programs. There are, on a local level, there are seed banks. You can go and give a little bit of your time there, get to know those people, and then it starts to snowball. There are meetups, they're called meetups, of like-minded people. So you go in, there are thousands of them locally that are focused in this area, this area, this area, this area. Find one that matches what you're interested in, even if it might be a little bit different than prepping, but they'll be prepping meetups. So there are lots of ways to build that local community, but all of it has to start like this. This is how you go out in the community. Open, right? You bring to the table what the gifts that you have been given. And they bring to the table the gifts that they've been given. And you don't know what all of those are in the beginning. So it starts with a hello. And it starts with you giving, and then that person wants to give back. And that's how you build community. So Danny Boy asks, what if all countries just stop paying the debt? Do they all start over? Yeah. If all countries stop paying the debt, what happens is you've got a debt implosion, and whoever they owed that money to, private corporations, private equities, whoever owns that debt, well, then they get to go in and take all those assets. So if you're talking about a country, what's the collateral behind that debt? That's been in question. Some say it's the land in the U.S., it's the land that's held in the land trust, and that's how wealth will transfer. But it's not just that easy, because then if you go to get more debt, who's going to believe you, right? Who's going to loan you that money? How are you going to be able to create that money out of debt? So, yeah, it isn't so simple. I know that people want to think that, well, we just go from here to, after all, the whole monetary system was changed when President Trump signed the Genius Act. People don't realize it. Just like they didn't realize it in 33, they didn't realize it in 65, they didn't realize it in 71, and they didn't realize it in 2025. But it does not change the fact that the entire global monetary system has been changed. So, countries just stop paying the debt. Yeah. Do they start over with what? They have nothing to bargain with. Whoever owns that debt has a right to whatever assets that country has. Yeah. And Josh B asks, today I saw an article on the way to work that China is dumping U.S. debt and that the UK is now the number one holder of our debt. Wow. Make sure I did not see that. So make sure I'll look at the UK, because it was Japan. It was China and Japan are the top holders of the debt. What does that mean? That nations no longer want to hold our debt. Okay, that's not good, because we're the world reserve currency. But China stopped accumulating as much of the debt and has been allowing its balance sheet to run off, which means that any debt that has matured, they don't replace that debt with more debt. And that's been true of Japan as well since 2013. I will be surprised, so that's something I'll want to talk about next week, and I'll take a look at that. But what does that mean, that nations no longer want to hold our debt? That means that we can't create all of this money. So all of in that big, beautiful bill, now we've got to create another it's going to add another 3.2 trillion, but we've got to add about $5 more trillion worth of debt. Who's going to buy it? That means that we are going to have to pay more in interest, to get people or countries or entities to buy our debt, which means that the market value of that debt will go down. And this is a huge problem. All of that debt that was created during ZIRP, zero interest rate policy, is already underwater at the banks and even at the central bank. And so if there's a run on the bank, then it's over. It's game over. And that's what that means. It means that if nations will no longer buy U.S. debt, it's game over. We're in hyperinflation. We've lost our status as the world reserve currency, which we already kind of have anyway. But we can't go out there and borrow more money that we need to execute all of these programs and to grow more debt. And a lot of that is what the stablecoin legislation was about, because we've lost those markets. Those entities that would buy our debt have been going away since 2013. So what does the Genius Act do? The stable coins? That's about creating a new artificial market for our debt. Yeah, it's not good. It's game over. That's what it means. It means game over. And not just for the U.S., but for the world. Because this is the foundation. The U.S. 10-year Treasury is the foundation of the global markets. So if there are no buyers of our debt, it means game over. And Devhan 5428, could Trump want to cut rates to increase the value of precious metals to then audit Fort Knox? Well, the lower interest rates, I don't think he wants to cut rates to increase the value of precious metals. I think he wants to cut rates so that it is easier to service the level of debt that he wants to bring out. It's not about the precious metals. He does believe in precious metals, and that's why I think we've got a shot at getting gold back in the monetary system again. But the auditing of Fort Knox has gone dead silent. So I think that's telling a much different story than wanting to audit Fort Knox to revalue gold to deal with the debt. I do see a revaluation in our future because they've got to get rid of this, right? All the debt that's been issued. That's what they have to do, period, end of discussion. And every single central bank has a gold revaluation account. Every single one. But I don't think it's about auditing, increase the value to audit Fort Knox. I don't think the gold is there. You know, there was lots of talk about it and then it went dead silent. Why did it go dead silent? Why? There's a reason. I don't know what that is. I'm not privy to it, but it's probably not a great reason. It's probably because it's not really there. And what happens if the world knows that? That just hastens the decline of the dollar that much faster. I think that's why it went dead silent. And Kathy Piscatello says, hi, Lynette, have you changed your position on XRP after going to the convention? As everyone's saying, it will be used as a utility token and banking system replacing SWIFT. No, I have not changed my mind on any of this. And that really is because I understand how these transitions take place. It's not so easy. Yes, they want a full surveillance economy, and they're going to get a full surveillance economy. You better have your gold and your silver out of the system. No, I mean, here's my XRP, this one. Here's my XRP physical image of that coin, and here's gold. gee whiz, this is not crypto gold. This uses up energy. It does not store energy. And it is so easy to change the program. This is program money. What do you want? No, I have not changed my opinion on it. And I want to. You know, to be perfectly honest with you, this is something that I really think about a lot because I have been watching this whole transition since probably about 2010. I'd have to go back and look. I just remember Bitcoin was like $7 a coin when I started paying attention to it. And you know, honestly, there are sometimes I'm thinking, wow, am I doing people, you know, a disservice? Because I've been watching this whole evolution and now we're at the pinnacle. It was, did they get enough adoption? Did they get enough adoption? Did they get enough adoption? Yeah, we got enough adoption. But I also know that these transitions are not easy and they have to burn off the old system in order to go into the new system. So wherever they are in terms of this stuff, wherever they are in nominal value, that gets burned off. And we're going to have an opportunity to see exactly what is going to survive. But it will be at a much less expensive level. So there will come a time where I'm going to say to you, okay, this is what I'm going to do. If I weren't sitting in front of the camera like I am and trying to give you the best guidance that I possibly can with my integrity intact, I'm going to tell you, there are definitely some stocks that I would have bought. There are definitely some cryptocurrencies. I mean, I thought about it. I'm not going to lie. I've thought about it. I've considered it. And especially the stocks. And I'm like, it never would have been Tesla, I will tell you that. Because I've done pieces on it. But as somebody that has studied currency life cycles, and I don't know anybody else that have studied this as long as I do, I know what they're setting you up for. And I know how they make these transitions. And that's why I could not participate by putting even my fiat money into it. I think it's okay if you do because you're a private person. I'm not so private and I have to live my words. Otherwise, why would you bother to listen to me at all? For those that have come to the farm, you know, I'm in dead central Phoenix. You'll see. I use the mantra. I mean, that's how I developed it because I said, okay, what do I need? What do I need? What do I need? And I don't buy stocks and I don't buy cryptos and I don't buy bonds because I'm very crystal clear on where we are in this currency's life cycle. Crystal clear on it. So no, I haven't changed my mind and I haven't changed my mind on Bitcoin. I have these conversations, but I know how they do it. I mean, I don't know what to say more than that, really. But, and yeah, I mean, yeah, the SWIFT system's trying to be, and think about that. Wait a minute. Let's kind of think about this a little bit more because everyone's saying it will be used as a utility token and banking system replacing SWIFT. And SWIFT is the U.S.'s global payment system. And really with all these cross-border payments and all of this tokenization, I mean, I know that SWIFT is doing its best to stay relevant. Not sure that it is going to be relevant in the new system. And so that could take it over as a payment system, but so could tokenization. And remember, the IMF has also been working diligently on a universal coin, which frankly makes the most sense to me because that's a basket of currencies and there are no limitations. So they could put every single currency in that basket. So now you have a universal currency, this umbrella, and then it just translates easily into local currencies. So people don't realize that everything has changed. Yeah, everything has changed already. I hate to tell you this. It's done, but what is not yet done is burning off all the old garbage. That still lies in our future, and that's also where the opportunity to get sound money back in the system is. Our work is critical. And Thomas Weaver asks, does the transfer of dollars into cryptocurrencies have an effect on the price of gold and silver? Does it artificially suppress the price? Well, the transfer of dollars into cryptocurrencies in and of itself would not suppress the visible price of gold and silver. They do that with derivatives. And if you think about the term derivatives, it is derived from something, but you can't convert it back into the underlying. So it's those futures markets and those derivatives against gold and silver that are used to suppress the visible price because they can create an unlimited amount. The last time before they changed the accounting rules at the Bank for International Settlements, I saw this myself. I'm not taking anybody's word on it. For every 1 ounce of physical gold, there were 62,000 ounces of derivative gold. It's much worse now. So that's the tool that they use to suppress the price. However, having said that, when you think about Bitcoin and the cryptocurrencies, I mean, how are they sold to you? This is outside of the system. This will protect you. It is decentralized. The governments can't control it. It's outside of the system. Well, BlackRock just became a whale. There are not just Bitcoin, but all the crypto ETFs and all the new cryptocurrencies and stuff. It is not outside of the system. I'm sorry, but it is not outside of the system. Yes, you can put it on a thumb drive. You can put it in your pocket. You can go anywhere you want in the world. But it's not outside of the system. It isn't the bill of goods that they sold you. Now, gold is decentralized, universal. You can take it anywhere in the world, in any form, and instantly have the same level of purchasing power. But no, I'm sorry. I'm not saying I'm never going to own cryptos, and I'm not saying I'm never going to own stock. I just know that all this is about lulling you into a false sense of security so that they completely annihilate you as they transfer your wealth their way. They can't have my wealth. I'd rather have it in physical gold and silver and food, water, energy security, barter ability, wealth preservation, community, and shelter. That's where I want my wealth, and that's how I hold it. And PR chocolate. But yeah, to your point, there would have been a whole lot more money that went into physical gold and silver had they not created Bitcoin when they did. That's part of the reason why I always felt it was a Trojan horse, and not a coincidence that it came out in January of 2009 when QE, oh, I wish that would happen to them. QE came out in March of 2009. Not a coincidence. And the NSA white paper on how to create a mint, voila, people, voila. Can you not see how they just created this from nothing? Can you not see it? And it eats up resources. It eats up energy. It eats up water. It eats up resources. And PR Chocolate asks, what will happen to Social Security checks? They will not buy you anything. You know, they threaten, and then people go, no. But, I mean, look at it. Could you live on your Social Security check? No, you can't. So, yeah, they become irrelevant. That's the importance of community, too. We have to help each other. We really have to come together and help each other. And Terrafin, I haven't seen you for a while, asks, how does the UK plan for all of this as they are very different to the USA? They even charge people tax for purchasing silver. Cheeky. Thank you. Oh, thank you. P.S. Love your blouse and your show. Thank you very much. I appreciate that. And we work really hard and constantly work to make it better, better, and better. But actually the UK, and no matter where it is in the world, and we are working on this because we want to be able to execute the plan for everybody all over the world. So stay tuned. We are absolutely working on it. But the strategy does work everywhere in the world. I question that because there are differences. And one of the key differences, honestly, is in mortgages, because we're lucky here in the U.S. you can have a 30-year fixed rate mortgage, which enables us to repay that debt that you've had for a very long time with dollars that have virtually no value. Exact same strategy as the government. Whereas in the UK and most of the rest of the world, you have to reset those mortgages every 2 years, maybe up to 10 years. So it's a bit more of a challenge, but no, the strategy, I've really thought about this because I get that question a lot, particularly when I travel. Strategy works everywhere. You want to have enough silver and barterable gold, so fractional raw kind of pieces, less than an ounce, that's what I mean when I say fractional, to sustain your current standard of living. And call us. We can tell you what you would use gold for, like property taxes would be one, and what you would use silver for, even if they charge you tax to buy it or taxes to sell it. This is their tool to keep you away from it. But I can guarantee you whatever those prices are that you're paying is cheaper than the cost that you don't, if you don't have these assets, because the strategy is also designed to recoup any taxes, any losses, any fees, right? But it works everywhere in the world. Some of it works a little bit different because countries will have different policies. So you want to be able to sustain your standard of living. You want to be able to protect the fiat money, intangible wealth, even if it's in cryptocurrencies or stocks or in a pension or something you can't even touch. You want to make sure that you can protect what you've already accumulated and be in a position to take advantage of the crisis that we're going to be seeing very soon. Those are the three things. And you can do that with the strategy anywhere in the world. So we will help you with that. We will help you with that. And Robert H. asks, how do you vet your group prior to engaging with them? It's bad operational security when you invite people into the circle of trust. In a hit the fan scenario, it may end up with everyone for themselves. Oh, and okay. So first of all, there's timing, and we've really thought quite hard and long. Even when I was with ITM and at Thrivers, how do you enable local communities and support them? So, I mean, it's easier to do a background check. It's hard. I mean, I hate to admit this, but it's true, because we all look at people from our vantage point. And because it's probably stupid for me to even say this, but because I happen to be a kind of a generous sort of person and a more trusting person, yep, I've been taken advantage of. Yep. And it gets kind of tiring, but I'm not going to let somebody else's bad juju impact how I live my life, because I'm quite clear on what my job is in this world. And it is to help you get from here over to the next system and be better off, or at least as intact, and get you through it. That's a tough one. Time shows. But here's another thing. People really always do tell you who they are. You just have to believe them. So think about that. But, if you are having a group, I don't think doing a background check on somebody that's coming in is an awful thing. And kind of like you do if you were going to hire them for a job, you want to know who these people are and what skill sets they bring to the table and what are their intentions. Time will tell you that as well. I don't bring anybody in and say, okay, this is where I have all of my stuff. So you have to also hold some things close, but not everything. And I think that's a lot of the problem. In a poopy hit the fan scenario, it may end up with everyone for themselves, but that would not be a good thing, because if it's everyone for themselves, now you're weak. It's divide and conquer. And they've been pushing us in that direction really since the 70s. The home was the heart, right? And so when kids got off school, they went home and there was somebody at the house and they had their cookies and they helped with homework, and maybe they went out and rode their bikes and they did these things. But the home was the center. And then we had latchkey kids, right? Now who's raising those kids? They're kind of raising themselves. And so understand, and especially if you read a lot of what the IMF and the Bank for International Settlements puts out, if you read those, and if you read the beginning reports when they're trying new policies or what have you, it really was about distracting and putting people in a position that they didn't have time or the inclination to pay attention to what they're doing, because then they get away with a whole lot more. I think that's disgusting myself. But no, there's strength in numbers. It is not everyone for themselves. What do you bring to the table? What value do you bring? The time to create these communities is today, while you have the time to vet them, to really get to work together, to know who these people are. Then that's what develops that trust. It's not automatic. But in the heat of things, then you're right. You're not going to know who to trust. So no, when the poopy hits the fan, if you are not prepared, this is the whole point of prepping in every single way, including your community. If you wait, then you aren't gonna be able to do it. I've been working on this a long time. Am I 100% done? No. In fact, the truth of the matter is, and I've told you guys this, I'm just really learning how to create that community. And because I'm learning, I'm taking you on this journey. So if you're learning too and you come up, bring it here. Let's have that conversation. What are you doing that is successful? What have you done that's not so successful? It's not just the good things that need to be shared. It's everything that needs to be shared. Good, bad, help people get to where they want to go. And Ernie Ferguson asks, can you talk about the bill Texas just passed to make gold and silver legal tender for everyday transactions with digital gold and silver backed? You know what? Why don't I see, now I know Daniel is out of the country for a minute, but I'm going to have him back in. So would you pull that for me? Because I'm going to have him on when he gets back. Then we're going to pick a day. It won't take away from any of the other work that I'm doing. It will be an additional day where we are going to do this live so that you can ask really the expert. I'm not the expert in this yet. I'm still learning mode. But Daniel Diaz, he's a lobbyist. He works for the Citizens for Sound Money. And you know, I sit on that advisory board. He's who's teaching me, but he's also going to be teaching you too. So I think he'll be back this week or next week. Not exactly sure. And we'll get him on to start this process, because we're also going to teach you how you can become involved to get gold and silver as legal tender with the right kind of laws in place. So I'm going to hold that question because I don't want to give you any misinformation, and I have somebody that can be brilliant on it. That's what I'm going to bring to you shortly. And P asks, as a Canadian, is it worth trading, switching over all my bullion gold for sovereign coin? What would be considered high premium, over 10%? And which country do you recommend? Well, it's a really interesting question, and one that I pondered on, and one that, thanks to Daniel, actually, is why I could sit here and say to you, yep, I think we are finally getting to the place where we can offer the strategies globally. Because quite honestly, I have this book in here. You never really saw me pull it out, but every single country had gold and silver coinage at one point. Every single one did. And yet the US is not the only country that has the collectible coins. So, even in Canada, are you talking about the new sovereign coins, which then would be classified as monetary gold? And Canada particularly has no gold reserves. That makes it scary to me, right? Because, wow, you saw, didn't they just debank the attorney for the truckers? And what did they do to the truckers that were doing a perfectly legal strike? Boom, they cut them out of the system just like that. So I would think that in Canada, better have collectibles. And you bear with me because I hate to use the word should, because as soon as I use the word should, you know that it's not happening, except that there has to be a collectible market everywhere because there were gold and silver coins everywhere. So, and what would be considered a high premium? That's kind of a sort of loaded question because it depends on what you're doing. A 10% premium would be high on bullion or monetary gold, but on a rare collectible would not be high. So it's all relative. But if I were you, you got to do what you're comfortable with. But if I were you, I would be buying Canadian collectible coins. I don't know. They've got to exist. So that's where it's in research right now. I have a lead. We're pulling on that thread. So I will say, stay tuned. We are pulling on that thread and we'll figure this out. I promise you. We'll figure it out because we all really want to, not just me, every single strategy specialist, because they are willing to take the time to have these conversations with you, even though there's, at the moment, not a whole lot we can do, but we can help educate you. So we are pulling on that thread. Just give us a minute. We'll get it done. And then I'll be able to answer that question for you much better. But I do know that we have a lot of Canadian neighbors that do buy the U.S. collectible coins, and there are ways for you to do that, which if you call us, we can have that conversation. And Galakey says, hi, Lynette. I was wondering, during the revaluation, won't the dealers and banks, etc., be insolvable to convert everyone's jewelry and precious metals and collectibles into cash? Thank you. Also, when do you think you will expand your strategy into Europe or at least outside of the US? Okay, so we'll do each one at a time. So during the revaluation, won't the dealers and or banks be basically unable to convert? Look, I have been documenting the exit strategy. If you are executing the strategy with us, this will be set up and timed for several ways. Number one, we do not want to hurt, just like if you were coming in with a huge buy, we do not want to artificially push prices up. And on the sell side, we do not want to artificially push those prices down. So depending upon what you are doing, we are doing it in a metered way, because the goal on the way out is to capture as big a premium as we possibly can. And we have several different avenues that we can choose to do that liquidation. So we have a solid exit strategy. If everybody goes to do it at one time, absolutely, because this is a physical market with supply and demand dynamics. But that's also the beauty of gold and silver being used in every single sector of the global economy, because it gives us more options. And the way that we build the strategy to begin with is in layers. So even when we exit, there will be shorter term exits, medium term exits, long term exits. We've got it all documented. And that's all planned out. Whether we can marry coins to create a string to capture a premium that right now does not exist, but has historically existed in the past. Can't guarantee that's going to happen again, but there's no rush like a gold rush, or no fever like a gold fever, I should say. And so chances of that premium coming back again are pretty good. Maybe they will, maybe they won't. But we're setting everything up so that if they do, we can take advantage of it. So, if there's a big rush, it's going to be a challenge. And I'm not really worried about the ability to convert into cash as I am in how that's going to impact the price. Okay. I don't think the cash is going to be, but it could be a problem for some smaller dealers. It could be a problem for some small wholesalers. That's not the way that we are structured. So I don't anticipate it being a problem for us, but we are really strategic. And I know some people might not think that. I mean, we have an extraordinarily brilliant team. I'm really proud of us. Honestly, I really am so proud of us. And we have a lot of experience in all these different areas. We have this expertise, and we're the only ones that have this strategy. The only ones. Someone can say it, ask them to prove it. They don't have it. They don't know how to do this. But because of all of my studies, we do. We know how to do it. And when do I think we'll be expanding our strategy into Europe, or at least outside of the U.S.? I am hopeful that I got to give us a little bit of lag time, because you guys get to hold my toes to the fire. And we just kind of got this lead, and we're all pedaling as fast as we can. I'm going to hope that it is within the next 6 to 8 months. I'm going to hope that it's within that period of time. Doesn't mean that you can't do anything before that. And it doesn't even, there are things that I want to do, but I'm only one person. I'll say that. I'm only one person, and I'm already working 7 days a week. So it's a little challenging, but we are definitely, we're committed to it. We just got the lead on that. We're working on it. And once we figure it out, then we can make it happen very quickly. Well, can't say very quickly, because we also need, there's a lot of layers to it. What can I tell you? There's a lot of layers to it, but it's been on our radar since day one, and it is one of our top priorities. It's not our tippy top, but it's definitely up there. So we'll let you know. Andrea van de Kloot asks, I want to work for Lynette in Europe. Oh, awesome! I speak Dutch, German, and tourist French, but I live in North Carolina. Call us 833-GLD-ZANG and tell them that I said to call. And let's see, who should she talk to? Probably Marie. probably Marie. Or you can email us and let us know. So, yeah. Awesome. Thank you. Awesome. Yeah, call us. Talk to Marie. Tell her that I said it on air, although my guess is she'll probably know pretty quick that I said that. And hopefully that would work. That would be phenomenal. And Matthew Belanger Camden asks, I will put my money back in gold again as usual. Gold work as Social Security money to pay the bills when unemployed. So I put it back, and if I don't use it, it will be my retirement. Ta-da! I know people go, oh, gold. Why is that an awful thing? I don't understand that. Gold and silver, I mean, really, when you get a jewelry and a wedding ring, isn't most of that gold if you can afford it? Of course it is. Gold or silver? Of course it is. Thank you very much. I agree with you 100%. And Stephen Brewster says, will gold and silver mining stocks be any use in currency collapse as only gold to be paid out and failing currency unless you hold until CBDCs? Look, I like miners. It isn't that I don't like them, but they're still a stock, and you have stock in a company. You don't actually own the underlying gold. And what happens is that as governments, desperate governments do desperate things. So as we've seen quite a bit, most obviously really in Africa, where they changed the rules, and also in Venezuela, right? So miners have to pay higher royalties, which, by the way, is a form of confiscation. And not just miners, but they're also forced to sell a chunk of what they pull out of the ground in the local currency that's being hyperinflated away. So no, I'm sorry. I'm really sorry. Now, it makes sense once we get all the rules in place and we're somewhere near a bottom. That's when it makes sense for me that I would go in and choose the best creme de la creme, whoever has managed to survive. And we don't know what those mining costs are. It's much cleaner. This is much cleaner. It's already mined. It's already minted into a coin. It's already sound money. It's just cleaner and easier. And it isn't that I don't like miners, and I do a lot of mining shows. It's just different. It's a stock. It's not the physical gold in your possession or the silver. Yeah. And Tommy Two Gloves asks, where can I park $500,000 while house hunting? Is a credit union money market a safe place while I'm searching? Actually, if you're house hunting and you want to do that with $500,000, and I don't know whether you're thinking that that's a down payment on a house or purchasing the whole house outright. So there's a couple different things that I would think of. If you are, that's what you want that money for, period, end of discussion, and there's nothing else, I'd probably park it in very short-term treasury bills, right? Maybe 3-month, and I'd probably do a ladder, right? So you'd have a 1-month bill, a 2-month bill, and maybe the longest a 3-month bill. And when the first month bill matures, then you do another 3-month bill. And I would probably do it in that because it's a treasury. However, if it was, let's say you wanted to buy a $500,000 house and you want to put 20% down on it or whatever you'd need to do to get the best rate, then I would, let's say you just needed to put $100,000 down to get it, then I'd take that $400,000 and I would buy the gold, and I would earmark some of that gold for the mortgage, because when they do that overnight revaluation and you see that the spot market goes up, I don't know, 3,500% like it did in Venezuela, what might take you $500,000 in terms of today's dollars, if you buy the gold, what might take, I'm just going to pull a number to make it easy, what might take you 40 ounces of gold to pay for right now might only take 1 ounce of gold to pay off during the reset. I have a mortgage on this house because I want to execute that strategy, period. And I have a big mortgage on it because I've been in here for a long time, and so the mortgage has gotten paid down. But if it were me going out to purchase, and again, depends on whether that $500,000 is a down payment or to buy a house outright, because property is going to get cheaper. And if you pay for that right now outright, you're going to be paying somewhere near the top of the market. You got to have a place to live. So I'm not saying don't buy it. You got to have a place to live. But what I am saying is, why would you pay it with dollars that have more purchasing power when you can pay it with dollars that have zero? So there's a whole strategy. Call and talk to us about it, and we'll help you figure out what's right for you. And remember, you're the one that are going to live with the consequences of any of these choices. So we'll just lay them all out. These are all your options. You look at them, you see what feels the rightest for you to do, and then that's how you move forward. But we'll help you figure out what all the options are, and then you do what you're comfortable with. And but I would do it in very short-term treasuries themselves directly, because those aren't going to be bailed in if there's a problem or a run on the bank or the credit union or anything else. And Uper Guy, my biggest concern for a while now is how difficult will it be to exchange silver for things I need? How will it be exchanged to pay for property taxes or food or fuel? Okay. So there are a number of different ways that you're going to be able to convert it, and none of them will be difficult. Okay, so it may very well be like we've seen in Portugal, like in the 2014 during the sovereign debt crisis. A lot of people pulled out their silver and actually used the silver for direct payments. Now, you can do that if it's a person to a person. And if it's a small business, a local business, that you will likely be able to do because it's easy enough to have a scale. Everything is computerized, so it's easy enough to put the silver on the scale, and there's your loaf of bread or your pint of strawberries, and hey, maybe you just need to clip it, because I wouldn't care at all about clipping this thing, right? But if you are like property taxes is a great example, because now, if you are in Missouri, you can actually pay for your property taxes with physical gold and silver. So that's why this is important, and to get it legalized and the ability to use it to pay your property taxes. And you do it the same way. You know what the spot market is. Everything is tied in. You weigh it, you pay your property taxes. But let's say for a moment that you are in a state where that is not a possibility. Well, in that case, what you're going to have to do is you're going to have to convert it into whatever the currency of the realm happens to be at that time. So let's say you're here and you're a Zang Enterprise client, right? Because if we work this strategy out with you, we are also there for the exit and how you are going to make that exit to meet those known requirements. And what we will do is we will convert it into whatever that currency might be. If it's stablecoins, if it's a CBDC, if it's dollars, whatever that might be, we will do that because that's part of the exit strategy. So in some cases, it will be direct. You're going to actually use the metal and you're going to work with whoever the local is, like we've seen in Portugal, like we've seen in Venezuela, like we've seen in Zimbabwe, and many other parts of the world. In other cases, you're going to need to convert it into whatever that local currency is. This is why it's so important to be working with somebody that you can trust, right? because you might need to convert it. But let's say for some reason you bought it from a dealer that goes away, that just isn't there anymore. It's still gold and silver. It is still used in every single sector of the global economy. So it can be a smelter, right? It can be a jewelry store. It can be a pawn shop. It can be a scrap company. There are a number of different ways to liquidate. We have been working through all of them here at Zang Enterprises, creating those relationships because, again, when it is time to exit, then the goal becomes to capture the most that you can. But remember, if we know and we're working with our clients, we have it scheduled. We know what needs to happen to capture the most gains for you and to not inhibit the gains in the natural market. So it's a little complicated, but actually it's pretty simple too. This is not a small market. It's been around longer than any other market in history because gold and silver has been money the longest for thousands and thousands of years. So that's probably the easiest way to do it. It'll be either direct or we'll have to convert it in and then use that. And it would not surprise me at all if banks were tasked with gathering as much gold as possible. And so it could even be that at some point in time, the banks themselves could convert it into the whatever the local currency is to pay those bills or those taxes or what have you. So stay tuned because that's the kind of thing that is very important for us to have a plan on, and we do. And Uber Guy also asks, will the government make it difficult to use precious metals outside of their system? Well, they've made it so that you don't want to even go in to precious metals, with the taxation, with the manipulation, the price manipulation, etc. I do think that the government could easily, we've done it 3 times in the past, and manipulating the price is absolutely a form of confiscation. So the answer is yes. I 100% think that the government can make it almost impossible to use monetary gold in the system. This is why I personally, for my portfolio, that's why I do the collectibles. And even in this fractional form, right, under an ounce form, these are still early pieces or foreign pieces. This is a rooster, right? Yep, a French rooster. So there are ways to do it that is in a way that you can still use it in the normal marketplace. But that's why I don't buy bullion gold, because I do think that they will make it impossible, whether they confiscate it or however they're going to do it. But these are in a different classification. And the premium that I pay on this is my wealth insurance. I'm crystal clear on the fundamental value. I'm crystal clear on the fundamental value. I don't pay more than the fundamental value. And you wouldn't either. That's not part of the plan. That's not entirely true. It depends on what your goals are. If you want legacy gold and you're in that certain rarefied air, then yeah, you can pay more than the fundamental value. But generally speaking, it's not necessary, so why do it? Stay within it, because then what's the worst thing that happens? Let's say this has never happened before, but let's just say that these lose all of their premium. Well, if you haven't paid the fundamental value, this is a guarantee that I can give you. At some point, all assets go to their fundamental value. So if any of the premium was burned off and you bought this way below the fundamental value, you're still in fabulous position. Fabulous. It doesn't matter. That's one of those things. It doesn't matter if I'm right or I'm wrong. If I do bullion, I better be right. If I do what's classified as a collectible, this is just a raw piece of gold. That's all this is, but it's pre-33. So our government classifies it as a collectible. But this is what you're going to use when you go out into them. I want to buy a car, I want to buy something like that, right? So yeah, I do think they'll make it difficult. That's why I only want the collectibles. I want that classification. And I'm, willing to pay that premium to get that classification if I then have the gold that I can use in the normal marketplace. What if I'm right? What if I'm wrong? Doesn't matter. And Grouper NJ asks, my question is, what do I say to my mom who keeps telling me that the bank promised her that she will get her initial investment back no matter what happens to the market? Well, this is what I suggest, because it sounds like they put her into some kind of product. And if they put her into a product, then that means that they have to have a prospectus on that product. So what you want is to get your hands on the prospectus. Now, that's pretty easy to do. You can go online and you can pull that. And then what you do is you do a Control F. So you're going to look for key words, right? And look at the guarantee. I'd put guarantee in the search bar, because what you're going to find is that they're going to say that they can't really guarantee this. So they might do that verbally, but that's not the contract that she signed when she made that investment. So what you do is you have to show it to her in black and white. And that's how you do it. And if you need help with that, then you give us a call. And if whoever it is that you talk to doesn't quite know how to do that, I know how to do it, and I'll help you out. Okay? So you call us 833-GLD-ZANG if you can't do it yourself, but you got the name of the product. You can pull that prospectus up, and I can guarantee you this. In there, it's going to say something about the claims paying ability. It has to, because they cannot guarantee you something that they can't actually guarantee, and that's something they actually can't guarantee. They'll say it verbally. Well, yeah, it's insured. Well, the insurance is only as good as whoever is insuring that product, and it's only based on the claims paying ability. So you show it to her in black and white. That's what I've done in my career. That's why I'm still working on getting better and better and better. But I'm as good at this as I am, because this is what I always did for my clients when I was working with them. You're watching it. So that's how you do it. And Redeemed Patriot, please explain, crypto is backed by the dollar? Why have it? Been curious to start an account. Yeah, well, the stablecoins are actually backed by US dollars. That was the Genius Act law that Trump signed into law a couple weeks ago. And so what that does is it forces companies like Amazon that'll come out with their own stablecoins. They have to back those stablecoins 1-to-1 with dollars. Now, we were talking earlier about the adoption of the stable coins, which are backed 1-to-1 with dollars, especially in those developing economies where their currencies are hyperinflating. So the public, their population has run to stable coins and the perception of safety there. But yeah, by law, those stable coins must be backed 1-to-1 with dollars. So every stable coin that gets created by Amazon or JP Morgan or any of the other gazillion companies that are now going to be creating stable coins must go and buy dollars, but they can certainly do that in the form of treasury debt. So while we have those entities that used to buy them and hold them, like China and Japan and banks, They've changed the rules because now they've decided they need the banks to keep buying them, but that creates a whole market. So yeah, I'm sorry, redeemed patriot. And you're right. Why have it? Yeah, why have it? Makes absolutely zero sense. You're out of the frying pan into the fire. It doesn't make any difference. They're both garbage. Yep. And if you haven't, I don't know where you're curious to start an account, but I hope it's with Zang Enterprises. That would be wonderful. And Gloria Kuri asks, I've heard you say that your collectibles should be stored within a short distance. I'm in California, but my coins are kept private in a vault in Arizona. Do I need to give them closer? No, that's really close because it's easy enough to get from California to Arizona. Having said that, when you're looking at your portfolio, right, we're talking about short-term, so your first line of defense. So your barterable part of your portfolio should, at the minimum, and remember, if you're doing it for 10 years, you don't need all 10 years near you. But again, that's part of your exit strategy, is also in the storage. So while for the lion's share of your portfolio or the growth part of your portfolio, that's still close enough, and you have ample time to get them into your possession or to get them liquidated. It really depends on how you're setting up your strategy. I mean, if we're executing it for you, then you're working with the vault, the private vault here that is attuned to us, well, then that's the growth part of your portfolio. But at least a chunk of your barterable portfolio should be very, very close to you, because you're just going to wake up one day and it's going to be chaos, and you're not going to have enough warning to call that first part in. So that's what I was saying earlier. The strategy really is short-term emergency, and you can even do that shorter term, but it's built in layers. So you can have, depending upon what you've built out and what your goals are, a very short-term emergency that you need close to you. Yes, you do. And you know, you might not need all of it, but you need a chunk of it to buy yourself time to be able to get the rest of it in toward you, or more of it in toward you. Then your barterable, that would include cash. That could also include some gold backs. So that's good. That could also include some of the digital gold like Kinesis or Glint for a certain, that's for the very first part of it. So that's part of the strategy. Now you're talking about exit strategy. And so it's layered. It isn't one answer. It is layered. But call us, and if you're executing it here, then your strategy specialist, I meet with them every week. We do one-on-one, so we're pretty much physically together unless they work remotely. Then we get together quarterly, but actually we even meet with Zooms. So that's pretty regular. But yeah, it depends. There's never just one blanket answer, but there certainly is a part of your portfolio that you should hold closer. But the rest of it, it's just about timing, right? So that's part of the exit strategy that we have set up for all of our clients. It's important, but that's going to be based on you too. So just let's have that conversation. That's all. We'll have that conversation. We're good. And E flat 1234. Couldn't all countries agree to a global jubilee and erase all debt? Or does this get back to property ownership as you mentioned? Well, all countries could agree, but who's really ruling everything? It was Rothschilds that said something like, I care not who makes the laws, I care who owns the money. And the money, or who manages the money. And while it used to be corporate banks, I mean, with the stablecoin bill, that was just handed over to more obvious corporations like Amazon. So who owns all of this government debt? If they declare a jubilee, you'd still have to go through court. No, they can't just declare a jubilee like that and have it over. Corporations that loaned them the money are not going to go, okay. I mean, no, I'm sorry. It does go back to property ownership and that string, and everything that you and I own outside of physical gold and silver that you're holding, right? You don't own it. If you don't hold it, you don't own it. Private vaults can be an exception, not a bank safe deposit box, but a private vault, because they don't hold your assets. You're just storing them there. They are not integrated. They are absolutely segregated. So I wanted to make clear that that's okay too. Yeah. Chris Willis asks, I'm very concerned about Australian income tax on unrealized capital gains. Are you familiar with it? Can I comment? I'm not, but I'll get familiar with it. And by the way, it has been confirmed. We will be back in Australia in March of 2026. I did get confirmed show dates for one of them. We will probably be doing 3 events, 2 in Australia and 1 in New Zealand, maybe 2. So I'll keep you updated on that. But let me find out more about that. Could you make sure I get that, please? Thank you. And Gia Key asks, I was wondering during the revaluation, won't the dealers and banks, etc., be insolvable? So to convert my jewelry and precious metals, collectibles, etc., into cash. Some will probably be, but it's the strength in the network that is really critically important, and also in how that exit strategy is executed. So, it's important knowing what you're going to position into. And that's why we take the time to have that conversation, define your goals and define your circumstances and what you have to work with. And that's something that needs to be consistently revisited, maybe annually, maybe when things change, we definitely need to know so that we can make the modification in your strategy. But I would say then the next most important thing is how you're going to liquidate out. And that's why it's really important to work with somebody that knows how to do this. And I don't know any other company that has an exit strategy. I don't know any other company that really has an entry strategy other than buy what we have to sell. So I feel quite confident in what we're doing because what we're doing is so planned and calculated. And we've got the cooperation of our wholesalers and everything else. So we're planning everything to that. It's easy to buy, but you got to liquidate too. That's part of the strategy. So no, I think some are going to have problems with it, but I don't think all are going to have problems with it. And Stephen Brewster asks, other than chocolate bars and sweets, I can't recall the last item I saw here in the UK that was made in the USA. Shame, as I'd buy decent American goods if the shops. Come on, USA, get manufacturing again. Stephen, I agree with that. And I remember, when Nixon took us off the gold window, what did he say? And if you buy U.S. goods, then you're not going to be impacted by inflation at all, which of course was a big fat lie. And then what did we do? Globalization. I remember that, right? We shipped all of our manufacturing jobs overseas. I mean, I wish I still had that really fabulous winter sheepskin jacket that I bought in the garment district in New York. It was a phenomenal piece. Well, so we're getting it back, but you can't just flick a switch. Now it's going to take time. But that's what I was saying earlier. The supply chains, well, they're deglobalizing. And so, yeah, we are going to get manufacturing back, and we should. It should have never been just shipped away. And that would be true for all countries. There's got to be some base to make sure that the population has a decent standard of living and can make a decent wage. But the financial system is getting more internationally integrated, not less. It's just the supply chain. I agree with you, Stephen. And I hope when I make it to the UK that I see you there. That would be awesome. And Bill Bush asks, please explain putting back sound money back into our monetary system. What will that look like for us middle-class folks? Okay, so what that looks like is getting the world to agree that there is a component of gold, at least 40%, in the money that is redeemable. So if you don't like what you see the government doing, that's your vote. You go in and you say, okay, you can take this much of my digital money and send me the physical metal, because that's what's going to hold their toes to the fire. But what that really does is it levels the playing field. I mean, it is ridiculous and disgusting to me that I personally had more opportunities and more rights than my grandchildren have. They don't, and it's all because I was born in 1954. I'm a tail end baby boomer when they were really kicking this whole disgusting fiat money thing off. And so that was a benefit to me because it was the start of the growing of all of that debt. Now we're kicking the can down the road, and now it's time to pay the piper, and who's really the ones to suffer are the younger generations coming up that simply do not have those same opportunities that I had or anybody else in my generation. And I don't think that that's right. I think that that's a horrific thing. And so by forcing the world, because they won't do it voluntarily, we have to do it. And the way that we do it is by demanding it. And the way that we demand it is by converting this garbage fiat into gold and then saying, this is what we want, or we're not going to use your money. If we can get 3% of the population so that there is 40% redeemable money in our new system, that playing field is now leveled. We're going to have to go through this hyperinflationary depression because we have to burn off all of this garbage. There is no choice about it. So this is about when we start fresh. Then we have a component of gold in the system, and the public has taken its power back. Because if the governments are forced to be fiscally responsible, they can't inflate our wealth away. They can't transfer the wealth and pick winners and losers. So what it looks like is a 40% redeemable gold. You don't have to redeem it, but if you don't like what they're doing, you have the right to redeem it. And that probably will need to be tested once. And then for our children, they get to dream and have the ability to make those dreams come true because their fiscal future has not been gambled away. And that's what it's been. And it's disgusting to me. It's disgusting to me. I hope that answered the question. If not, let me know and I'll try and figure out another. And that's true for everything. If I explain something that doesn't make sense to you, let me know and I'll try and explain it in another way. That's my job and I'm happy to live up to it. And JT asks, Mrs. Lynette, what do you believe will happen to fixed loans on houses by May of 2026? I was thinking of either paying off my house or buying silver and use the silver to pay it off later. Buy gold, okay? Instead, I'm not paying off my house. Though I could, the only reason why I'm not is because I want to execute the strategy and pay it off with dollars that have zero value. And while both gold and silver will move up, gold is the monetary metal. And that's the one that they do those overnight revaluations again, not silver, not silver. And so when they do that revaluation, even though historically that while all the other prices will implode, gold will maintain, silver too, will maintain it on average 9 months. So maybe it'll be longer, maybe it'll be not as long. I don't know. And I'm not going to wait to find out. But let them do that overnight revaluation, and then you grab what you need to pay off that mortgage at that time. What might take 10 ounces now might take 1/10 of an ounce then. So, May of 2026. So that's about what? Not a year away? Oh yeah, because we're almost August of 2025. Okay, I don't think, I could be wrong, but we still have to go through the hyperinflation. And you have a fixed rate mortgage, so that's not going to change until they do that overnight reset. Yeah, I would not be paying the mortgage out, and I wouldn't be trying to do it with silver, do it with gold. And Gia Key asks, Lynette, do you know if your strategy is different for people in Europe? Also, do you think you will have soon reputable dealers located in Europe, especially Switzerland, for your strategy? And that is what we're working on. And yes, I've really had to think about this a lot. There are some things that will not work the same because you don't have a 30-year fixed rate mortgage like we're just talking about. However, this is for a currency overnight collapse and reset. So yes, the strategy would work everywhere in the world, even if it's tweaked a little bit differently, it will. And if you have a 2 to 10 year fixed rate mortgage, then it'll work even inside of those parameters. You're just going to have to deal with it a little bit differently until we get to that hyperinflationary overnight reset. But the rest of it absolutely will work just the same wherever you are in the world. And that's why we're working so diligently. And again, thanks to Daniel, he really gave me that first good thread lead to be able to execute this throughout the world, everywhere. So, yep. And Cryptonomics, and I think that this has to almost be the last one. And thank you for coming, Cryptonomics. I really appreciate it. If you are predicting a collapse, reset, and chaos, why not diversify with crypto, US dollars, and precious metals? You know, I don't think that that's a horrible idea. The reason why I don't personally do it is because I'm so familiar with what happens during these transitions that what I don't know is which cryptos are going to survive. It certainly looks like Bitcoin is, and it certainly looks like XRP is, but I couldn't guarantee that because I can't read all of the code, and I'm not really sure how these things are set up. So since I'm kind of like leading you, then I have to put my money where my mouth is. Does that make sense? And while I agree that you can be diversified, dollars are certainly what we use as our tool of barter here. But for me, it's more of an ethics thing because I believe that those cryptos and Bitcoin and what's happening in those markets were a Trojan horse to get adoption so that they could then get full control of you. So that's why I don't. You certainly can. You need to do what you are comfortable with, regardless of what I say. I'm telling you why I don't. If I were not in this position, I probably would have, to be honest with you, because I see it and I understand what's coming. But for me, it's not about these things going up in nominal terms. It's about guiding you through this reset transition. So, yeah, I'm not saying that you shouldn't do it, because if you're properly diversified, if you lose all your money in dollars and cryptos, this is going to make up for it, right? So that's a properly diversified portfolio. It's just that I can't do it for those reasons. And I think a lot of it then could also be misconstrued if I'm buying, a cryptocurrency or in dollars. I have more dollars than I like to have, but I'm running a business and this is the tool of the realm. But I'm also properly diversified. So if that goes away, I can still pay everybody's salaries because I got a boatload of this. I also have a boatload of this, but this is my emergency money to make sure that I can. And when the dollar does go away, it's going to be, think about how fast it happened in 2008. Literally, not figuratively, literally 24 hours and done. And Wolf asks, will companies, stores, etc. have scales to weigh the metals? I am 100% sure of that. If they can do that in a little remote village in Venezuela, they can do it anywhere. So yes, there's scales and computers. Well, actually, there could be places without that. But don't worry, with the stablecoin, they're looking at banking those that are unbanked. Yes, I don't think that's going to be an issue, Wolf. And Ed Bradley asks, the strategy referred to, is it possible to obtain a copy, a PDF, or a pamphlet book? Nope, it is not. Not that I don't think that we should do that. But we kind of rule by consensus, and it is my strategy. I mean, so I'm sorry, Ed. No, not at this time anyway. I don't really think that's always going to be true, but that is true at this juncture. And Sunday Money asks, a friend of mine got me into gold. That is a very good friend. I'm just starting. I've only got 2 ounces, but he's got 29. I feel like I will never get to where he is. What should I do? You just keep accumulating. And there are all different ways to accumulate, but honestly, do it with intention. That's really what the strategy does. So I would say, Sunday Money, call us, have that conversation with the strategy specialist so that you start to define what you are trying to accomplish, and then you can prioritize that so that you know what you have to do. But, you visualize, right? You put it in front of you so that the path becomes more clear. And once you do that, that's really when a lot of doors that you don't see right now can start to open for you. And part of it is, you see me wearing jewelry. A big reason why I wear jewelry is because gold and silver in any form are monetary at its base. So there are all different ways and all different levels that you can accumulate. And all these different ways and levels address this goal, this goal, this goal, this goal, this goal. So call us, establish your strategy, and then how do you eat an elephant? One bite at a time. Additionally, though, I would really encourage you to build that local community. You have a great friend that got you into it, but you need more than gold and silver to survive this. You remember how hard it was to get the kind of food that you wanted at the grocery store? Remember 2020? COVID and the grocery store shelves were barren, they have not fully fixed that supply chain. And it takes a minute to get it back locally. So I'm going to encourage you really, really, really strongly with your friend to start developing that local community and create surety in all of those mantra areas: food, water, energy, security, barterability, wealth preservation, community, and shelter. All of them are important, but you're also going to have to prioritize, and we can help you do that. We can help you just talk it through so that you become more clear. And the more clear you are on where you want to get to, the faster and easier you will actually get there. And when you have help to do it, that's everything. That's everything. And I really appreciate you being here, and I hope you're bringing your friend here to this live as well. And Ed Bradley, and okay, we can do a couple more. Okay, Ed Bradley asks, if you have time, why would banks and the owned politicians allow the hyperinflation and their mortgages paid with useless imaginary money? Or is their objective to take possession of the property? I'm going to reread that. And if I don't answer this properly or to your question, then let me know. Okay, why would banks and the owned politician allow the hyperinflation and their mortgages paid with useless imaginary money? Okay, well, first of all, you're making the assumption that banks and politicians understand money to begin with, and they don't, right? The reason why they will allow all of this hyperinflation is because they do not understand money. And what do banks want to do? Banks want you to take on debt so they can make money. They also want you to have fiat money, intangible wealth, so they can hold it on their books, and then they can take that collateral and borrow against it and trade, because that's where they really make their fiat money. But do I think that those in the banking industry actually understand true money, how money is created and supported, and how it is easily devalued? No, not really. I mean, some of them do for sure, because they've got to be complicit in this. But most bankers, I mean, I was a banker, and I can tell you, talking to some, and I was a stockbroker, and, talking to some people that I actually have learned a lot from and have a lot of respect and admiration for, and they don't understand money, really. So that's just an assumption, and I'm going to tell you it's erroneous. Why would they allow the hyperinflation, the mortgages to be paid with useless money? Because the rules have to fit for all, which is why I like to work in the kind of gold that those at the top that can write the laws and rules work with. And so because these are on fixed term contracts that can't easily legally be changed, I mean, they can fool you to make you think one thing while it's a different thing, just like when they took the gold away from us in 33. Anybody that had a raw lib minted prior to 33 could have continued to hold it, like Treasury Secretary Wooden did and his friends that knew all about it. But you can't just automatically change those contracts. So those contracts then do get repaid if you understand the window of opportunity. So, yeah. Ed, they don't understand any of this. I don't really know too many other people that I could actually sit here and tell you that honestly do understand this. I've just been groomed for this moment in time and guided by whatever is up there. Because all I can really guarantee, and all I ever promise them, is I will show up and do the work. And even when things don't make sense to me, believe me, that happens. That totally has happened over my lifetime where it just didn't make any sense. But I'm not so arrogant. I've learned in my age, right? I just learned to be patient and just promise I will show up and do the work and just use me as a vessel and as a tool. And then it always happens. It's just, so I trust it. I trust my gut. I trust what I'm told to do. And most of the people in this world, whether they're bankers or they're politicians or they're stockbrokers or they're gold brokers or they're whatever, doctor, whatever. We are not really taught about money. They don't understand this. But fortunately, the universe put me in the right place at the right time and put things in front of my face so that I do understand it. And that's what you get from me. Is their objective to take possession of the property? Well, ultimately, yes. Their objective is for you to own nothing, which means then you have to rent everything. Have you noticed how many subscriptions every month? I mean, imagine if you had to pay every month to rent this cup or you didn't have a cup. You tokenize that cup, guess what's going to happen to you? The landscape lifestyle. What grade of slabbed pre-33 would you recommend buying? Any grade MS coins, okay. Depends on what you're trying to accomplish. If what you're looking to do is like pay off your mortgage, then a higher population, lower mint state coin is perfect. If what you're trying to do is build an ongoing dynastic wealth legacy, then you want a higher grade and or a much more rare coin. Because if you think about it like property, and now I think we've all seen the ups and downs of the real estate market. We're on a down leg, but which property holds up the best and the longest? The beachfront property, the mountaintop property, right? The higher end property. So you want to build your legacy part of the portfolio with the highest quality and the lowest population that you can do. So when we're putting a portfolio together, and we have it all broken out into what is most likely the best for converting into income producing assets or converting into stocks or paying your chronic medical bills, paying off a mortgage, blah, 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 blah. We have all of that broken out. That's why having that conversation about what you're trying to accomplish and then allowing that to dictate what you do, I'm sorry, but that makes just the most sense to me. So a properly diversified metals portfolio is based on your goals and then a variety, right? It's from raw, which is this, to, depending upon what you're trying to accomplish, the most rare, and you want kind of everything in between. But again, it's based on what you're trying to accomplish. Barterability, right? Barterability. And the same thing is kind of true with silver, though I don't, this is my barterable portfolio. Slab silver I don't use for barterability. So, but you want a variety of sizes. So there's really no one mint state that is better than another. I mean, you can have a common coin that's mint state 64 that you're using to, say, pay for a chronic illness. On the same token, you can have a super rare 1964 or mint state 64 that's about legacy building. So call us and have that conversation, and then we can help guide you. Because when we're looking at how we're going to position it, We have everything categorized, right? So based upon what you're trying to accomplish, if you're looking at a slabbed coin, what we're going to do is we're going to make a comparison. And if you think about it again, like real estate, what we're looking for is the cheapest house in the best neighborhood. And that's true at every quality level, because that's where you're most likely to get your biggest bang for your buck, right on that edge. So I can't just, there's not one answer. And I think, okay. I think we can do those other two. Jimbo Khan, why would I pay way over spot for a pre-33? To make sure that you can hold on to it and use it to execute the strategy if they should do an overt confiscation of the bullion. And as long as you pay below the current fundamental value, no matter what happens, you can't get burned, even if it loses all of its premium. So you do that for insurance. Just like my Uncle Al had all of those pre-33 coins when it was illegal to hold more than 5 ounces any other way than the way that he was holding it, that's a huge impression on me. So you would pay that premium so that you had the kind of gold that you could execute the full strategy with. That's why. And Tommy Two Gloves asks, what's to keep the Congress or a rogue presidential executive order to outlaw any strategy? Possession is not 9/10 of the law. It's the entire law. Thanks, Lynette. You are a very precious asset. And so are you and everybody that's here, because we're developing a community. And there are things, what's to keep Congress or a rogue presidential executive order to outlaw any strategy? Are they really going to worry about the itty bitty strategy that you and I are executing? They're going to go for much bigger strategies. I don't even think they know who I am. Now, maybe after I get more involved with Citizens for Sound Money and start speaking in front of them, they'll start to know who I am. But I just don't really think I'm a very big fish. I think I'm an itty bitty fish in a big pond. Though how fabulous would it be if we all got to execute that strategy? So that would be one thing. Another thing, Congress, I mean, why would they outlaw a strategy versus confiscating gold? Right? I mean, that's what all of this manipulation since 1913 has been about, is confiscating the gold away from you, and that's how Congress would do it. But if we can get enough states to legalize it, then I think that we can actually, kind of like what happened with the marijuana laws, enough states adopted it to put pressure on the federal government. And that's what I'm trying to do from the grassroots effort, from the states up, and then globally from the countries down, and squeeze it into one little ball. So I think that I'm not really worried about any strategy. I'm more worried about confiscation of the asset that makes up the strategy. Does that make sense? Yes. Okay, Josh said. Well, you guys, again, I mean, you don't even know how energized I can be in the worst mood when I walk in here on Tuesday. And by the time I've had this time to spend with you, I'm in the best mood ever. I'm just like high. I really am. And I cannot thank you enough for showing up and being part of this community and bringing everything that you bring. So thank you so much. I will see you next week. And until then, please be safe out there. Bye-bye.